January 10th, 1901 is a date we can look back historically as the day the world changed with respect to energy. I'm the person that went on Bloomberg, and I'm suggesting that oil and copper are going to decouple. After 100 years, because of that discovery in 1901, which was Spindletop, Texas, this was truly the first oil gusher. It was discovered by Anthony Lucas, and when that gusher hit, they couldn't cap it. 100,000 barrels a day, and because of that, it happened in coincidence with all the machinery and all the equipment that has made our lives comfortable to this very day. If you look at these two graphs, black is the oil price, the yellow line is the copper price. If you look back over 40 years, they are highly correlated. Over 90% of the time, the dominant commodity, that being oil, has lifted the entire commodity complex. They've all went up kind of like one monolithic group, up and down. And I show you this from a zero axis over 4 years. In my opinion, this is going to decouple definitively. And when you look at the entire basket, you have to think of yourself like an investor, because that's what everyone here is. This is what my friend Don Cox once said: never invest in the story on page 1. That's the efficient market. Invest in the story on page 16 that's headed to page 1. Don Cox has made a career out of investing on page 16 stories. What you're looking at is the fat man of fossil fuels. And if we are truly going from the fossil fuel age, you live in the green box. That's where you want to be as an investor, and that's where you have to appreciate and recognize the entire energy complex is going to go. I'm showing you here bubbles. This is courtesy of my friends at Visual Capitalist, and this is the value of various mined commodities. And you have to ask yourself, do you want to invest in the bubbles that are getting bigger or smaller? Of course, you want to invest in those that are going to have future customer demand. I now show you what the price of oil is. Oil is bigger than all other of these commodities combined. So we're going to go through and we're going to look at the oil market. You must have an appreciation for how this industry has grown and where we are today to understand which bubbles are going to get smaller and which bubbles are going to get larger. We're going to feature today lithium, nuclear, which is uranium, and cobalt. And in the next sort of 8 or 9 minutes, I'm just going to give you sort of the macro, the glue of why energy is important. And we're going to focus on basically this basket of commodities. On that same day in 1901, whaling was the 5th or 6th most important industry in the United States. 70,000 people worked in whaling. It was the lubricant of the American economy. All that changed in one day. Now, of course, they didn't know it at the time, but we look back historically, and we can say that because of that oil discovery, the lubrication of America changed. This is a picture of Spindletop. I was there on my tour, and I'm particularly fond of this because this Anthony Lucas was actually a Croatian. His name is Anton Lucic, and he went to the same school as Nikola Tesla, only a couple of years apart. And this relationship between the companies that made the machines, the people that provided the fuel, they collectively advertised, and for 100 years, this is what sustained all the growth around the world. Then in 1938, they found oil in Saudi Arabia. The Arabian Peninsula had discoveries. The English had the influence there. Iraq, Iran, Kuwait, but not Saudi Arabia. The British did not believe there would be oil there. The Standard Oil Company of California would discover oil on March 3, 1938, and they would send the foremost geologist, Everett de Gaulier, to explain what does this geological find, what does it represent? Him and his team would declare this is the greatest prize in all history. What could then render that useless? On this day, we can look back, and people will write PhD thesis on this. On this day is the next change. This was the capitulation of the energy markets. Within 12 months of this date, many things happened. We're going to talk about that today. But this was effectively the day that OPEC capitulated. You recall the Saudi Arabians, they said, we are not going to be the swing producer anymore. Why? I'm going to show you. Now, I followed energy for 20 years, and to me, I read it like Harlequin romance. My job is to write or articulate to whether you're an energy analyst or whether you're just a general investor, what changes have taken place. This is the way we used to drill for oil, vertically. The formation, you would penetrate it, it would be a quarter mile, and you would do it every half mile or quarter mile or 1 mile apart. This is the way we do it now. We take the straw, we bend it sideways, and they go for 2 miles. And they do it in 3 or 4 different horizons in every direction. As many as 30 of these straws into the formation. What you used to get 1/4 mile of pay zone, you now get 100 miles. This is a game changer. Let me be even more specific. This is a picture of the Permian Basin, and you can see how the spacing is on some of this drilling. What this was really was the marriage of 2 companies. George Mitchell was doing the fracking. They were drilling vertically, and he paid his team over and over and over. Keep doing it, you'll figure it out. And all of a sudden, north of Dallas, the gas rates exploded. And the people up in Oklahoma, Devon Energy, they figured this out. They're the horizontal drillers. So really what it was the marriage of the company that did the vertical fracking and the company that did the horizontal drilling, and they merged together. 2002, they drilled 7 wells. 2003, it got a little better. They drilled 55 wells. Do you know how many of these wells the American horizontal fracking companies have done to 2015? 150,000. This is a game changer. Just as they were about to go outside the United States, the oil price collapsed. Saudi Arabian oil comes from 3,000 wells. American oil now comes from 500,000 wells. They couldn't let this stand. They had to be no longer the swing producer. They shut this technology down cold. The problem is, they became efficient. This works today. They need $30 oil. They've all figured this out. What would you do if you had 100 years of reserves? Or you? Or you? What do? They have a problem, and it's an existential threat. The most important person in the world of oil is represented by these 3 letters. His name is Mohammed bin Salman Al Saud. In Saudi Arabia, they used to say, save some of the oil for the grandchildren. They're running the country now, and they are now pivoting from the oil age. He has 100 years of reserves, and he has no one left to sell it to. It won't be like a Mad Max movie where the last barrel of oil sells for $1 million. You are going to give this barrel of oil, and you are going to participate in the profit of the enhanced product that's made for it. So what he's doing within this pivot, he's floating a portion of Saudi Aramco. He is going to reinvest those dollars, as much as $1 trillion, into Vision 2030. Now, who here remembers the Cambridge Show 2006? I do. I remember it like it was yesterday. 12 years goes by in a blink. What he's really doing is he's electrifying the Saudi economy. He had 2 choices. He could choose to live in Staticville, or he was forced to live in Progressville. Oh, and he's chosen. Better way to put it. He could choose to be a victim or a contrarian. He has no choice. This is the future of energy. It's represented in an electrical cable. Does not matter how you spin the cable. It all goes through electricity. The greener and cleaner that you create and utilize energy, the more that is required of copper. He doesn't know it, but in reality, this movement, the divestment movement, $4 trillion of money under management has pledged to divest from fossil fuels. Even the Saudi Arabians are now part of that divestment movement. I'm not here to tell you what's right or wrong. I'm an investor. I just want to follow the trends. I want to follow in the bubbles that are getting bigger, not smaller. Look at this graphic. If you're going to take one picture of one slide today, it's this one. Even the bean counters have figured this out. These are the 5 major commodities: oil, natural gas, coal, iron ore, and copper. If you go to year 2035, there is only one major commodity that has significant new customer demand, and it's copper. It's all science. But here's the problem we face. Do you know that 45% of primary copper comes from 20 mines? Where's it going to come from? Look at this chart. If we don't reinvest in the sector, there's no more copper. You can't, it's not a business. And it's not the will, my friends. There's lots of that in this room, in this hall. It's the money. You can't finance it. So the people that produce copper, they know this. And that's why I like copper over and above every other commodity. The old thinking was basically that the installed copper base, if China slows down, so too that shall be the demand for copper. That's the old rule book. Don't use this anymore. The invisible hand in commodities now is this. It's called modern energy. So pervasive is the application of these things that we're going to talk about in the next few minutes that even the smallest village in Africa will have increased demand for these things. So you have to think to yourself, if you go back to these bubbles, do you want to invest in the bubbles that are getting smaller or bigger? I will suggest to you with strong conviction that the bubble that grows the biggest of this entire screen shall be copper in the next 10 years. If you're not a patient investor, this is going to be boring for you. Now, my friend Frank Holmes, he purchased these copper shoes for me. Fantastic. I was supposed to wear them today. Problem is they're 10 and a half and I'm a size 12. But Frank, thank you so much. You're so kind. I had to display them because they're fantastic. If you look at the picture here, what this is a depiction of is the industry. I am an investor. The way these companies are financed has changed. Many is the number of brokerage houses that are no longer in existence. The stockbroker is going away. How can you invest? How do you, as an investor, how can you make money buying these shares? Well, I've written a book that talks about these themes and how a generalist investor can be more informed. I'm going to give away 100 books today for those that are interested, if you would like to read my book. We're also going to talk about some opportunities, because what you're here for is stock symbols. I think so. Lumina Copper is a company that was self-financed. And what that was a collection of copper assets in the last bear market. It was created and financed by Ross Beaty. If you invested $1 on day one, you ended up getting $80 after he spun out all the different companies. That was a very happy ending. So this is my company. It's called Copperbank. I'm only going to spend maybe 60 seconds on it, because I'm not here to promote you on it. I'm just here to show you this is how I'm investing in copper. That's my share price, and we just raised $1.4 million of our money, and this is what we're going to do with it. We're very proud of the company because we hatched it 2 years ago. We haven't really diluted the company, but with this raise, after 2 years, there's certain things that we've done. We don't issue warrants. We have almost no fees that we've paid. We did our financing oversubscribed, and it was above market. But I'm even more proud of these things. We've had the most insider buying of any listed company in Canada 2 years in a row. We have the lowest burn rate of any listed company in Canada. I'm very proud of that. We throw pennies around like manhole covers. We self-finance, but most importantly, we have the who's who of copper investors invested in the company. And 90% of our capital goes into the ground. So I have this sheet here after my talk. If you get a book, you don't need to take a picture of this. This is the 3 boxes of catalyst value that you should anticipate as a shareholder of Copperbank. We're going to start drilling in the next 30 days in Alaska, and we have another project in Nevada. We aim to deliver news flow every week for the rest of the year 2017. Okay, so we're mindful of dilution, we self-finance, no warrants. The drill starts spinning in 30 days. There's my business card. If anyone's welcome to take a picture of that, then you have my contact information. If you do become a shareholder, I will put you on our distribution list.